I'd like to ask my panelists for the morning power hour session to please join me. So Lee Kyriakou from the Clearinghouse, Allison Baller, who's the VP and Head of Industry Readiness for FedNow from the Federal Reserve, Tom Zak, the Chief Innovation Officer with SWIFT, and Dean Nolan, the VP and Director of Faster Payments and Commercial Cards at Fifth Third. Okay. So I would like to ask the panelists each to do a 2-minute introduction, introduce yourself, your role, and any opening statements you have. You want to start, Dean?
Sure, put me on the spot, right?
Yeah.
Well, hey, good morning, everybody, and thanks for having me here. My name is Dean Nolan. I am the head of Faster Payments and Commercial Cards at Fifth Third Bank. I've been on our Faster Payments journey since 2018, working in various angles, and excited to be here and have a chance just to be with a distinguished group of panelists here and just kind of talk what we're doing, about what's going on today in the industry. So thank you for having me.
Sure. Tom?
Good. Very good. Good morning. I'm Tom Shack. I'm the Chief Innovation Officer for SWIFT, and I feel like I'm really well positioned today between a client and the Federal Reserve. So I have a feeling this is going to be a really, really productive session. I think everybody knows what SWIFT is, so kind of save the description there. I have a newly created role as of January 2020, so kind of up on 3 years. In the role, I not only, in addition to innovation, but I run enterprise architecture. I look after all of our strategic partnerships with big techs and fintechs and people that do business with us. And then I look at and run all the control processes for introducing all of the emerging and new technology that we bring in to SWIFT globally. So it's absolutely a fascinating time in the industry. There's just so much going on, including real-time payments. People sometimes either don't know or forget that roughly half of our message traffic on the SWIFT network is actually securities related as well, in addition to FX. So it's a fascinating time for innovation. Everybody loves to talk about AI. Everybody loves to talk about new forms of currency and digital assets. I think we're pretty well positioned, not only to kind of work on those things, but really kind of bring the industry together, what we call our community together, to really solve some of these kind of hardest problems that we have. So really happy to be here today. I'm really happy to kind of share our thoughts and collect some feedback on what we're doing and what we're doing with the industry.
Great. Good morning, Allison Baller. I have responsibility for industry readiness on the FedNow team. And basically what that means is we are collaborating and have been with the industry over the last 4 or 5 years, working very closely with product, technology, sales, and marketing to bring the service to the market. And we are also now very involved in bringing the market to the service. And there's a lot of work to do there in terms of educating, in terms of helping everyone understand not only what instant payments is, but how do you get connected into the service. So really appreciate the opportunity to be here and look forward to sharing more.
Good morning, everyone. I'm Lee Kyriakou. I'm with the Clearinghouse. The Clearinghouse has been around since 1863, apparently, when they used to bring the bags of paper, under a tree down on Wall Street and started to trade them. Those are our roots. We're a little bit more electronic than that now. So I'm on the Real RTP product team. This week is our 5th anniversary, so we've been live and up and running since 2017. We're running at about 50 million payments a quarter right now and growing pretty rapidly, so we're excited to be here. Our partnership with SWIFT is working on cross-border, right? Our first attempt at cross-border will be between the RTP US dollar real-time system and the RT1 system in the Eurozone. SWIFT is a partner with us in that process. We're very excited about that. We have incredibly easy sign up for about 85% of the market. When I say 85%, I measure that in terms of U.S. checking account balances, which is the one kind of common number you can keep using. About 60%, 62% of U.S. checking account balances are accessible on our network right now. And we'll go from there.
Great. Thank you all. It seems like we've been talking about real-time payments for so long, and I think all of us were on the Federal Reserve Faster Payments Task Force together. So I don't know when that started, 2015. So we've been talking about it for a long time, and now it's finally here. So one of the questions that comes up, because we are, as a country, behind most of the rest of the world in real-time payments, why are real-time payments fairly nascent in our country, the world's largest economy? Dean, you said you had some thoughts on that.
Yeah, thank you. Yeah, going back to 2015, it's been a while for us, but in terms of other payments that are here, we're still young, right? Real-time payments is still evolving. It's early in the journey. And when I look at what's going out there are certain places where real-time payments, frankly, are very mature, and they've gone from concept to table stakes in a year. You look at as-worked payroll, and that was a use case where I'm not even sure it was contemplated back with the task force, and here it is, probably one of the leading use cases. And it works because real-time payments provides value that another payment system didn't provide. Right? Getting paid at the end of your shift is great, but it wouldn't be as meaningful if you got paid 2 days later via an ACH. Right? So the real-time payment puts money in your checking account, and it's actually created use cases we've seen in the market where a lot of gig employees are going out Saturday afternoon to work to earn money to go out to the bar Saturday night, right? And this enables it to happen. But in terms of mass adoption, those existing payment rails all have a lot of value-added components that are tied to them. So if you're trying to displace a payment that's in an existing environment, not only do you have to displace the rail, but you also have to replace those value-added components that the users of those payments have come to rely on. I think that's where, with real-time payments, we're still evolving, and we're starting to see those value-added components get added on. We're starting to see the networks make those as part of the service offerings that they're providing with the rail itself. So it will evolve, and we're definitely going to continue to see that growth. But that would be that's why I think it's taking a while, is getting those value-added components to displace what are mature payments today.
Anybody else, Allison?
I'm happy to chime in. So as Dean mentioned, instant payments adoption is hard. It's not easy, and I do not think that this is just unique to the United States. As I understand it, for some of my colleagues who attended the recent SWIFT event, there was a lot of discussion about some of the challenges of moving towards adoption. And what's interesting is that in many international jurisdictions, it's actually mandated. So they have a much easier job than we do here, where it's not going to be mandated. And in addition to that, I would say just the makeup of the U.S. market is quite challenging in terms of the fragmentation. 10,000 financial institutions, and talking to some of our peer central banks, is once they get the initial 10, 15 banks, they're golden, they're ready to go. And there's a lot of diversity in the market as well. So what we're finding, as we're building out the service is, we're creating a lot of flexibility, which is great, but then flexibility drives choice. And then it requires a lot of education too, in terms of the financial institutions making these decisions in terms of how to get started, where to get started. And that creates, additional challenges as well.
Yeah, if I just add one more thing.
Yep.
I mean, Allison mentioned the lack of a mandate and the lesser concentration in the United States. So the banking industry as being important elements of why we're behind. The other one that's, I always think very interesting. We all think that real time is slow to come to the US. That's not what consumers think, right? Innovation has occurred without the systems being in place in terms of settlement. And so now we have this interesting problem where, isn't that Zelly thing, real time, and that, Venmo, whatever, and convincing consumers that it's not already real time is really on us. And that innovation actually is one where the market has been going, right? Those are the ones who want it instantly. And then two, kind of catching up to that and convincing folks that it's actually of relevance other than to banks is actually fairly important. So.
All right, good, thank you. Now we have Allison and Lee are both on the agenda later today to talk about FedNow and RTP. So I'd like to ask Tom to describe the SWIFT Global Payments GPI initiative and how it differentiates its services.
Yeah, obviously SWIFT's much more interested in cross-border payments. We do have some kind of local offerings, but that's not really what we do. And there's been a number of steps that we've taken to really kind of drive our mission, which is to deliver instant and frictionless transactions globally. And that's 11,000 institutions. That's 200 plus countries. That's access to over 4 billion accounts globally, right? So it's a pretty large mandate and pretty broad scope. So there's a number of things and steps that we've been taking to try to move in that direction. One example is the work and the project that we're working on now to try to figure out how do you connect these real-time payment systems together, and how do you remove the friction, in this case in a specific corridor, but something that could actually be scaled and used in other areas. And I think we also have to kind of separate out retail versus wholesale of real-time payments, and the perceptions and the needs and the value that's expected. It could be very different. And again, it's kind of one thing to have that thought when we're sitting here on Broadway and 48th Street in New York. It's very different if you're sitting in Istanbul or if you're sitting in Bangkok, right? There's very kind of different expectations when you start to dive into the segments. And what we found with GPI, which was launched in 18, so it's about 6 years ago, is we also kind of have to dig through why this is happening and kind of how far we've progressed. So there's certainly a lot more to do. And at Swift, we kind of engage with everybody where we see traction and momentum, right? Whether that's the Bank of International Settlements or other industry initiatives, we kind of go where our community wants us to go. And in the case of GPI right now, and many people don't know that, but most of the payments that are done on Swift are done through GPI. And what that does is it obviously gives transparency and puts a tracker on a payment, which we know. But right now, nearly 50% of the payments that are done in GPI settle with the credit in the beneficiary account in less than 5 minutes. 50%, 60% is within a half an hour, and 80% was within 6 hours, and virtually all of those are done within a day, right? So one thing, so we're making progress, but we're not there. The other thing to really understand is what is the driver of that. And people are kind of surprised when we say this, but based on our research and the feedback, the number one driver for payments having friction is because the sender puts in the wrong account number, right? Which is kind of shocking in a way, but actually nice because you could do something about it. So we just recently released an account validation, beneficiary account validation, receiving account validation API, where that can be validated before the payment's actually submitted. So again, we're making progress on these things, but we really have to kind of know where is that friction coming from, and then what can we realistically implement to be adopted at scale in the industry to really make progress.
Great, thank you. So speaking of account validation, one of the answers might be request for payments. And what is the current state of play in the U.S. for request for payments? Dean, do you want to take that one?
Yeah, gladly, yeah. So I think it's still evolving. That's how I'd summarize the state of play. We made an API available to our corporate customers at the beginning of this year to have them start initiating requests for payments. We got a lot of interest in it. What we found, though, is there's still some broader industry issues, especially around how we're going to bring in some of the necessary consumer protections when you get into that type of environment, and how we integrate those into the network architecture. That has kind of slowed down things. What we're finding is people want to have an answer to what that's going to look like before they're going to rush forward into this. I think there's a lot of energy going on with all the people sitting here at this table to get that figured out. And I think, we'll get that figured out in 2023. I suspect the 2023 will end up being a lot of test and learn, pilot, use case things, and then ramping up as the year progresses. But I'm probably not the best person to give that prognostication.
Okay.
Some partners down here are much better at it.
Lee, did you have something?
Yeah, I can add a little bit from a network perspective. Our first thought on any piece of a real-time puzzle is how do you build scale, or how do you build the nodes and sufficient percentage of the market access. So we have to do that with the first piece of the puzzle, which was what we called our PAX 09, or the credit transfer. And, once we got above, 50% reach, we could start getting there. You have to do exactly the same thing with each piece of the puzzle. And so with request for payment, that particular message, for it to be valuable, you've got to be able to send it, which means the wholesale side of banks have to have that sort of reach to send that message. And then on the retail side, The retail side of the bank has to be able to receive that message, deliver the message to the consumer, and give the consumer the opportunity to hit a button to say, pay it, and pay it when, and pay it how much. That part of the puzzle is hard, and we're working on that. And to do that, we have to partner, with banks like Dean's in terms of getting each piece of the puzzle in place and starting that up slowly and carefully. The other piece of the puzzle that we're working on is components. Now that we're focused on the retail side in terms of this use case, in terms of sending a payment from a consumer back to a biller, there are a host of issues that retail bankers are concerned with around, how do we know this isn't going to be a scam? How do we know that this is actually going to work correctly? And so we've worked a lot with our banks at the leading edge of the request for payment to establish what that warranty system is for when a bank sends a request for payment. They are warranting that that's for a valid purpose. And that's an important piece of the puzzle as well. And kind of getting all those in place before we get large volumes is basically going to be table stakes. And we're kind of working our way through that while the banks are kind of enabling their pieces of the puzzle and starting to educate both their wholesale, bill senders as well as their retail banks in terms of response.
We were going to talk about warranties a bit later, but since you brought it up, can you explain, does warranty, is that like insurance, or how does that work? Is it a dispute process or?
Sure. When we talk about fraud, I divide the world, and we'll talk about this later, into the unauthorized side, the authorized side. The authorized side means that the sender actually told the bank, pay this bill or make this payment. So those are scams, right? So the way that you could have a problem in a request for payment is that the party sending the request for payment is some sort of a fraudster, right? And so to ensure and to start to get that request for payment world going, the bank whose customer is sending a request for payment is warranting that request for payment is for a valid purpose. And for starters, we're also limiting down what are acceptable use cases for a request for payment down to kind of classic core billing, right? I've got a recurring bill from a biller, right? And so we're hoping will help the puzzle along. When you think about what does that warranty mean, I think the best analogy is think about it as I've got an ACH debit originator and you're the ODFI bank thinking through, am I going to allow this party to debit someone's checking account in ACH debit world? Very similar thinking in terms of that. The warranty goes further, though, and says that if the customer who sent the payment in response to the request for payment has a claim, there has to be a process to adjudicate, and there's a presumption that lies first with the bank whose customer sent the request for payment, that you've got to show that you've got a valid customer here. Then it shifts, and there's a process, and we're just kind of finalizing it, and you'll see the components of it. But that warranty process is to turn what could be a scam and a request for payment into one of the safest places you could get. It's the only scam where you're going to get paid back. Right? Think about it otherwise.
These are TCH rules and processes you're talking about.
Correct.
All right. Okay,
This
cool.
is all, the combination of the rules that RTP has set up around the request for payment and the warranty process, and then also the kind of mechanics of how is this going to work, which banks want to know exactly what's the process, right?
Okay.
That's not in the rules, but we're also laying that out too with our banks.
Okay. Anybody else want to?
Maybe I'll just chime in from
Yeah.
a FedNow perspective. So we've laid out the rules and the operating procedures as well, and very similar to what was just described. I mean, once the sending bank sends the request for payment, they are warranting that that's a valid business transaction. What we're finding, though, and we have a lot of work groups going on with many of you all in this room, is that there's still a lot of questions in terms of how this actually works in, from a day-to-day basis, even beyond the operating rules. So we're trying to sort through with the industry the best way to collaborate there. And then we're also providing, necessary tools, non-value messages as an example, to ensure that, you can validate that this person really is, or this account really is part of request for payment. You can request additional information, et cetera. And then, of course, the last thing I'll mention is just from a fraud perspective, you're required on the network to report the fraud if it
Okay.
occurs or you suspect it.
Since Allison brought up industry collaboration, I just wanted to put in a shameless plug for an industry group that I think we're all members of. It's called the U.S. Faster Payments Council, and that is one of the things that we're working on as a cross-industry group.
Yeah, and actually, I was just going to mention that. There's been, I'm going to reference some discussions we've had that are kind of build on what you all were saying. The real balance here is how do we provide those necessary consumer protections that you both talked about, but do it in an environment of an irrevocable payment, right? Which, from the biller perspective, means they've received good funds, right? And if you have a warranty, which then allows somebody to question whether that was truly good funds, there's a gray area there. If it's pure fraud, it's easy. We can figure that. It's that gray area that sits in the middle, and how you're going to manage that. And I think that's where a lot of struggles and a lot of great conversations are going to happen. And they're happening at the Faster Payments Council, at the Federal Reserve, at the Clearinghouse, and trying to manage through all of that.
Right, and we agree we weren't going to talk about Zelle, but that is, they haven't got their procedure set up to handle that situation yet for losing your money buying fake concert tickets, et cetera. Okay, so that was the state of play. Then next we were going to move into some questions about drivers. And I know probably everybody here, we're all sick of talking about the pandemic, but what other drivers were there as a catalyst for real-time payment adoption? Tom, did you want to take that one?
Yeah, again, I think it's important to kind of separate out, different segments, consumer versus wholesale or other financial institutions. I mean, the first part of the answer is I think that people are still trying to figure that out, right? So the headline is real-time payments, and then the question is, what does that mean, and what do I get, right? How can you prove that we're not just using new technology? For example, it's going to be better, faster, smarter, cheaper, safer. So one of the things that we always look for is, what are those things? I think in the wholesale markets, I mean, I think some of those advantages, or like I said, it remain to be proven, and that's where innovation comes in. We can try some of these concepts. We can actually see if the value could potentially be delivered and at scale. But you could have benefits in liquidity management, and you could have benefits in financial controls. What a corporate treasurer is going to be looking for is going to be different than the person that's a user of Venmo, right? They're not going to be sitting in the taxi waiting for the notification that the $20 for the drink tab, has come through, right? They don't operate like that. So I think getting, financial controls, liquidity management, better access to cash balances, especially in multiple currencies. Those are all kind of some of the drivers that we see. The other one I think is just structural, because everything is moving faster. We think that, and what we see is that expectations that people have in their own environment, their own experiences as consumers, they think everything should work like an iPhone now. And so I think there's some expectations that are kind of being drug along from the consumer experience into the wholesale markets. And again, I think the important thing is that we understand what those are, and then really, are able to prove, this is not just a new way of doing something that we already do, but it is going to be better, faster, smarter, cheaper, and safer.
Anyone want to talk about who are the winners and losers in real-time payments?
I'll jump in on that
Yeah,
one really
I'll
quick.
add after that. All right.
Yeah.
go for it.
or the losers?
I'll hit them both really quick. So, I think on the winner side, there are going to be use cases. I talked with one earlier about as-work payroll. You look at another one like digital wallet providers, where instant payments are transforming that industry, transforming the business model. So everybody involved with that business model is a winner, because instant payments are bringing new things to bear. On the loser side, cash and check are going to lose as we continue to electronify things. I think the other payments are going to, there's a use case for lots of different payments in this world, and instant payments are going to solve some of them, and some of the others will continue. So I'm less concerned about those others, but I'd say, anybody who's providing cash and check, that's where you're going to see, again, further erosion and migration of those to digital. So that was my winners and losers.
Yeah, but what I would add to Dean is both of those, cash and check, are going to have incredibly long tails, right? They never, ever fully go away, right?
So true. I mean, I just saw I was pulling together some slides on the history of payments, and it started off with bartering, right? And that was the first payment. And I recall being on a flight not that long ago about an online bartering system that exists. So here we are 2,000 years later, and the first one's still around. So, right, that's going to be a really long tail.
Yeah, I can give you some data, because one of the things I kind of went in to dig into was where's the market for real time? So roughly 25 billion payments a month in the United States, roughly, right? The P2P component, so card is a huge component of that 25 billion a month, right? Card works pretty well. You know, if you're going to tell me that real time is going to replace point of sale, my first question is going to be, what's the unmet need here, right? Now, clearly there is an unmet need because merchants don't like paying as much as they do on card transactions, right? But you kind of have to work your way through that. One of the things I found is that the cash piece and you know, total movements in the U.S. are really slow. 25 billion, you know, payments a month. The cash component dropped precipitously, according to kind of my best ways of estimating how that works in the last 3 or 4 years. It's a tremendous drop. Like the P2P portion that's using cash, which is the biggest piece of cash usage, looks like it's down to somewhere like 50 or 60% of the P2P transactions are cash. It's down from 90. And it's really this decade, and it's pretty impressive. So I'd say, yeah, cash a big loser. Wallets are really interesting. Wallets developed because we didn't have the banking industry didn't have the real time in place, right? So one of the big pieces for RTP is enabling wallets to settle instantly. Our first use cases were, you know, Venmo, PayPal, saying you want it instantly, and you know, doing an upcharge to get that, which gave them their first business model for their P2P. But wallets are in an interesting position, which is they went out ahead. They can catch up with real-time settlement. Is that hurting them or helping them? And that's a very interesting question, right?
Right. Anybody else?
Yeah, I don't want to get us off topic on the winners and losers, but I think the wallet topic really is pretty fascinating. And there was just recently, a couple days ago, an article about millions of dollars that was, say stuck or left over in Starbucks wallets or a major retailer. And it really is interesting when you start to think about, you know, the financial institution and where do you want that money? Do you want the deposits at your financial institution are sitting in a digital wallet somewhere? And so, you know, as you mentioned, I mean, we're seeing a tremendous amount of interest around those funding and defunding use cases where many of the institutions we're talking to feel like that's a really easy way to kind of get started and get comfortable with real-time payments.
There's a lot of money sitting in Easy Pass too, which is one of the original wallets, right? Okay. How do requests for payments and confirmation of payments go hand in hand? We talked before about liquidity and financial controls and treasury management. So how do those create new possibilities for automation, transaction timing, and cash flows?
So I can have
Sure.
to touch on that. So right now, I mean, reconciliation is really a manual process today from a business perspective, as everybody's aware. It's time consuming, it's costly, and really, you know, billers would really prefer to have predictable funds to free up their cash flow. So by tying the messaging with the payment and the request for payment instantly, you really have the ability to actually drive a lot of value in terms of reducing errors and delays and improving your overall cash flow. And then from a consumer perspective, it really provides a lot more flexibility. So with this capability, instead of just paying whatever amount is on your paper bill, as an example, you have the ability to maybe, you know, overpay, you know, what you are required to pay in terms of paying down your mortgage, as an example. And there's a lot more information that goes along with it. So it drives a lot more transparency. So I think we're going to see a lot of innovation in this space. But as we talked about, it's going to take some time to sort through as an industry, you know, and work towards some common standards and formats.
Yeah, and yeah, I agree totally. And when you combine the irrevocability with the confirmation, you end up with this environment where the real-time payment can drive real-time reconciliation for everybody, right? And I think that's the interesting part. So the holy grail of straight-through processing that my commercial card product managers talk about all the time. That can be enabled in this environment too. And then it gives all the benefits that you were just talking about and just streamlines everything. So you know the payment you can walk away from a payment with assurance that you've got good funds to release the goods, and you can walk away making the payment knowing assurances that it's been paid and they're not going to shut off your electric. And that's going to be a great environment when we get there.
Great. And speaking of cutting off your electric, real-time confirmation. So even if you've ever sent an international or any wire, I guess, you don't really know that the money got there. So it would be really nice to have confirmation. Does that close the gap in any way on some of these reconciliation scenarios? Dean?
So
No, go ahead.
Lee, why don't you jump, because I think I gave my answer the last one. Sorry.
yeah, the confirmation part, go to use cases and think your way through that, right? So the confirmation that the bill is paid, if it's on the due date and the electric's going to get shut off, that's particularly useful, right? And you think about the bank bill pay competing with Biller Direct, right? The component in bank bill pay that's always been short is that with settlement on ACH, you don't know for sure that your electricity isn't going to get cut off, right? And so that's actually a significant competitive kind of catch up for bank bill pay that's been losing share pretty consistently to the Biller Direct, right? I go to my biller's website to pay, especially if it's the day it's due, because they know they're going to give me credit where I don't. So those differences, use case by use case, kind of tell you where there's value being added in the puzzle.
Right. Anyone want to talk about integrating request for payment invoices and approval workflows? Is that part of the puzzle?
I will tell you what we thought 5 years ago. 5 years ago, we're making this new network and we're thinking, there's all this great volume, right? And we're all wholesale bankers, kind of pretty much in our backgrounds. And we think, solving those puzzles on the B2B side of the problem is going to be like where all the volume is. It ain't the volume, right? It is it's like trying to solve healthcare payments, right? Which, everyone's been working on for I don't know how long, and we're all going to be working on it for I don't know how much longer. It is a piece of the puzzle. It is not an easy set of pieces to work out. I mean, you think about the payments in the B2B space and how much of those are still check. To get at this, first off, you got to get small business, right? And we don't always think about small business, but the big volume is sitting there, right? And some of those solutions aren't going to be what we thought were the solutions for middle market, large corporate, right? Because there are alternatives out there because they behave like consumers. So, I don't know whether it solves the problem. I know it helps, but I also know, we thought that was the big area of benefit, and it hasn't been yet.
That's interesting. Very interesting.
Yeah, it's funny. It brings back memories because that was our proof of concept back in 2017, 18, and we're still trying to figure out exactly how we're going to, we've gone a different direction.
But I think you need all the message sets. You need that request for payment. You need a request for information to gather more. You need, the remittance. You need all the pieces of the puzzle to work that. Each one of those are going to require the banks on both sides to be able to process those messages, which that's not the hard part, and then get them to the customers in ways that they can use them. Those are hard. And it's going to take us a while to kind of get there. So
I feel that pain. I mean, my small company, Pagility Advisors, it's not like we get millions of deposits. I wish we did. But we get deposits all the time. We can't tell what they're for.
Yeah.
It's really terrible. Okay, so let's move on to talk about barriers. So Tom, in your international experience, what do you think are the key barriers to real-time payments?
Yeah, I think it's good to talk about the drivers as well. And I mentioned before the progress we've made with things like GPI and the steps we're taking to try to take the friction out before the payment's submitted. But again, the number one reason that there's friction in cross-border payments is because somebody puts the wrong account number in. There's other drivers in there. And then there's been, this is kind of recent statistics that we pulled out in September, and there's other research and BIS reports that we've worked with to try to really get to the bottom of this. There's a number of different reasons that are out there. Again, when you start talking about globally in 200 plus countries, it could be the data that's exchanged between the two banks that are doing the payment. It could be something as simple as operating hours. You send it. By the time you send it, they're already closed, and there's no way that's going to get confirmed and settled in minutes because nobody's there to do it. There's some countries have made a lot of progress. I was having a conversation before this session about the UK, for example, and the way faster payments have been implemented there, and it's fast. It works really, really well, and the operating hours are pretty broad, but we don't find that everywhere. And then there's also compliance checks. And that could be, for all sorts of reasons. But even if you get the message, you want to be able to settle the funds. If there's steps that you need to take in the destination country to settle, then those need to be resolved. So I think it's really important that we understand what those barriers are. We're able to prioritize those, but then we also need a view on how do you drive adoption, because a lot of what we're talking about today, and when I see in other venues as well, is it's one thing to have the capability. It's another thing to actually drive the adoption and then really get the benefit of what we intended to do, right? So even if you prove it, even if you build it, even if people say they want it, they still have to actually use it in the end, right? And we spend a lot of time on kind of driving the adoptions, not just getting on to building the next thing. And that's true with account validation. That's true with our new offerings like Swift Go, for example. We want to be able to kind of drive that. And a lot of the metrics that we have are not commercial metrics, are really driven by usage and adoption of what we build for the community.
And we talked about fraud a little bit before, but I don't know if you've heard about this. There's a real-time payment system in Brazil called Pix. It's pretty new. I think it's been around about 2 years. And the criminals came up with this brilliant idea where, they used to take you to an ATM and force you to withdraw money with a gun to your head. Now they force you to do a Pix payment in the middle of the night. So ironically, the banks had to lower the threshold of allowable transactions during the night hours to something like $500 to sort of stem the tide of real-time payment fraud overnight from kidnapping. But any other concerns we want to raise about fraud, security, or privacy?
Yeah, I'll start up if that's okay. So one of the hats I wear with the RTP network is fraud, and there's a yin and a yang on this, right? Because by design, a credit push system is safer, right? If I give you numbers for basis points, unauthorized transactions on card, those are numbers we're all used to, and we're used to like 7, 10, 12 basis points more for credit card, less for debit. Real-time payments is like we're talking unauthorized payments, UK, 1 basis point. Right, so it's by design safer. That's the one side of that. On the other side, right, because of irrevocability, if you're a fraudster, how do you want to get paid? I mean, let's ask the question, right? How do you want to get paid if you're a fraudster, right? I want to get paid instantly and irrevocably. Oh, right. So that's the other side of the problem, especially on well, I don't know about a gun to my head. That's an interesting use case. But I do think about fraud from the fraudster's use cases. And on the scam side, anytime you can pay me, pay me cash, I'm out of here, right? Anything that's immediate and irrevocable is preferred. So we know we're going to get movement from I'm scamming you this way to I'm going to scam you this way. Because I can get the cash faster. So does that make it higher fraud, or does that make it just shifting fraud? And are we still trying to solve the problem? So it's interesting. Anytime that we're going to have to re-educate consumers on safety and fraud concerns, we know we're going to have issues, right? And that's the other thing we're seeing here. And we've gotten our consumers so accustomed to, hey, you get your money back on a card. If you don't retrain them, that's on us. Let's be really, really clear. So there's an interesting set of pros and cons to work through on this.
Yeah. So who is the victim of fraud, right? If the consumer has a guarantee or a warranty to get their money back, then they're going to be a lot less concerned about it, right? And the financial institution or the bank, in many cases, they think about it as an economic problem. So how much money, they know how much fraud's costing them. And then, how much money is going to cost me to actually prevent that, And of course, there's other kind of risk associated with that, like reputational risk and that sort of thing. You don't want to be kind of the focal point for thieves and criminals. But it's primarily viewed as an economic problem in many cases, and as economic problem for the financial institution or the bank, not for the end user. So the dynamic is a little bit changing there. One of the things that we're doing, I think, that has tremendous potential is we're developing an anomaly detection model now, and in that we haven't announced any product enhancements for it, but we're building what I'm calling a foundational model for anomaly detection. What's anomaly detection? Not normal, right? So instead of looking at individual attributes of a transaction, what we're looking for is patterns. This is the first time that you ever tried to send money from a hotel room in Singapore on a Saturday night, right? And there's ways to detect that now. We have a service called the Payment Control Service, which is basically a rules engine, right? So if it's happened before, and again, many of the frauds that are attempted are on brand new accounts, right? So if you can set up a rule, it's like, well, is this a new account? Yes or no, right? Because you're gonna scoop up a lot of activity, potentially fraudulent activity. Now, it's not actually for us as a network to call a fraud. We can't do that. We don't have enough knowledge. It's not for us to do. But with this anomaly detection model, what we can do is we can actually provide that intelligence to our banks. And we can continue to train that model, not only with the traffic that we have on the SWIFT network, but we can do that in a way where, and we're looking for ways to deploy federated learning of these models, which means that instead of the data coming to the model to be trained, we transfer the model to the data. So I can give that to Bank X, and they can train the model and patterns on different segments, data that we don't have, flow that we don't see. We're primarily looking at wire fraud, for example. And if you do that, and we think as SWIFT, building this foundational model and working with our banks to train that, and having the trust of our banks to be able to do that, as opposed to a fintech or a big tech vendor, the hypothesis is that we can build the most accurate anomaly detection model in the world. We can build something that nobody else could build, and then we could deploy that in our own products that we make available, and then make that community sourced so that our banks can actually incorporate that in their products. So in our own products to provide intelligence for customers, and our customer products to build services and differentiate the way that they want to differentiate. So I think this might be one of the, and there's a good driver for it with real-time payments. This might be one of the best opportunities we have as an industry to truly get in front of fraud. And again, move that from monitoring in network, where it already happened, or is going to happen, to pre-validations to prevent it from happening in the first place. So I think, I don't know if this is the number one opportunity we have, but it's pretty high on the list. And we've prioritized this work with our banks and with fintechs and big techs as part of the innovation agenda at SWIFT.
And it's an interesting conundrum. I was talking to my friend Neil before we started about, do we really want our bank protecting us from our own stupidity? And I did have a case where I legitimately wanted to send $500 to a guy in Kenya. He was my safari guide. And I had to get in this huge argument with Western Union. They just wouldn't send it. It was so much friction. It was unbelievable. Anyway, next we were going to turn to what's needed for the future. So anyone want to talk about, well, we kind of touched on this already, but the need for greater industry collaboration to solve all these new, more complex business needs? I guess your fraud system would consist of some industry collaboration.
Yeah, I think the most difficult problems are going to be solved with the industry coming together to solve the problems, whether that's domestically here in the U.S. or cross-border. And I think, whether you're in market infrastructures or networks or in some cases things that are being spun out of banks, I think the origin matters a lot in terms of getting acceptance and early traction. But I'm pretty sure that, and the AI anomaly detection model is a great example of that. We know we can build a model that's more accurate together across the community with some of the foundational banks than even the most sophisticated institutions can do on their own. Just because of the access that we have to the data. We also have people who are willing to work with us that might not want to be able to, or might not work with a bank, an individual bank, for various reasons, right? And that could include a big cloud provider, that include academic research. So another part of the example that I would offer here is the foundational model that we're building. And for the technical people in the room, it's a temporal network graph model, right? So it actually maps relationships. We're building that in conjunction with Argonne National Labs, which is a supercomputer site in Chicago, and the data scientists are from the University of Chicago. So this is a Gordon Bell, nominee type of scientists that are working on this. I think it's the first time, and I haven't been proven otherwise. I think it's the first time a supercomputer is going to be actually used in financial services, right? So again, we're a relatively small company compared to especially our biggest customers. We're in a kind of a special position where we have the trust and we're trusted stewards of their data. We can coalesce people in the industry and we can bring the brightest minds in the world, whether that's from academia or from big cloud providers or from clever fintechs, to solve a problem that everybody wants to solve, right? Nothing good comes from fraud, right? You can't, unless you're the criminal benefiting from it, you can't make a case that fraud is good. It's not. And it funds all kinds of real evil things in the world. So we're kind of in a special position and trying to fully leverage that and exploit that to bring the community together to solve real industry problems. And I think the chances of us doing that is actually pretty high.
So when we're back here again next year, you'd be able to report what the results of the supercomputer experiment are, right?
So yeah, we absolutely.
Cool. That's really
Absolutely,
cool.
So I've got a bone to pick on collaboration and fraud. So,
Okay.
And, we're going to have to solve it because the fraudsters are happy to work together, right? But, the clearinghouse was looking at, a fraud solution, and we came up against AML issues. And so it was like one part was just saying, look, I want to stop fraud, and I want to do this any way that's possible. There's a flip side of that, which is in the AML world, the legal constraints as to what you need to be doing if you think there's an issue. We're actually coming up and blocking things. The other issue that is a blocker in terms of collaboration is, privacy and PII. Mm-hmm. And so how do you, we're sitting here at the network saying, gosh, if we could, allow good fraud engines all of this data, they would do better scoring models. And there's no question that that's the case. The ability to do so, at least in this country, I don't know about other places, has limitations, and we're just being dumb, right? And so we have to solve that. It almost seems like in the U.S. there's more interest in we'll just impose the liability on the banks. And it's just like, wait a second, if you really want to solve the problem, it's like, what are the components that you need? And one of the components you need, for the folks like Argonne National Labs, is just give me all the data. And we have limitations on the give me all the data. Even if we could, identify who are the right parties you want to give that to, we have limitations. And we're going to have to work on that. So that's the bonus.
I agree with you 100%, and that we're working on that at the Faster Payments Council. And one of the models we might try and follow is FSISAC, which is industry collaboration, information sharing for cybersecurity. It's a very similar issue.
Yeah.
I agree, and I think this is a great place for innovation as well with some of the emerging privacy-enhancing technologies, but also the techniques to train models. So the work that we're doing with Argonne, Swift transactions will never leave a Swift data center. We're never going to give anybody a dump. You probably have the same type of. So our privacy, security, and the governance around our members' data, it's not our data, is the most rigid that I've ever seen. I've had vendors come to me and say, your governance and your privacy policies are actually more rigorous than the Department of Defense, right? I mean, if there's anything like the way that we think about it is if you can make it better and safer and de-risk it, we do it at the expense of everything else, right? So we take that trusted steward role very, very seriously, and it's mature at the company. So when we deal with Argonne, we're not actually sending them actual data. What we're sending them is a statistical snapshot of what normal looks like. Right. And then we need to be able to do that in a way that we can mathematically prove that it's impossible for anybody training a model to be able to back into that data. So what they do is actually take the statistical data and they create, billions, if not trillions of rows of simulated data for not what happened on the Swift network, but anything that could have happened on the Swift network because they have the processing power to do that. So things that would take, a month to run on a standard server in a Swift data center takes 5 minutes to run at Argonne. Right, so your ability to kind of iterate over these things and to be able to create simulated data, again, not for what happened, but what could have happened in every possible kind of combination and permutation. That's the part that's really exciting. And then we're going to do the same thing with the federated learning, where we put the model to the data and not the data to the model. So I'm not asking a bank. I don't actually want banks to send me their data. We're not asking. We don't want that. We'd never ask for that. But the idea that you could actually take that and train and look for new patterns with what they know and what they have that you don't know, and share that and guarantee that that training data couldn't be discovered by somebody else. If we figure this out, this to me is like gold dust, right? I mean, this solves so many problems around privacy. And again, that's why we're so excited about it. If we can solve and build a model that's that accurate using these techniques, this to me is gold dust. I mean, it could be an amazing development for the industry.
Yeah, and I was gonna totally agree with what you're saying. It's really exciting what you guys are doing as well. And Deborah, when I was listening to your question, I was thinking a little, kind of maybe a little bit differently too, in that when it comes to payments, at Fifth Third we try to look at things from a jobs to be done lens, right? And when you look at a new payment, you've got the center part of the payment, all of us, right? We're having to solve the fraud and the connectivity and all that. But then you got the people on the outside, as bankers, we'll call them payers and payees. In the real world, we'll call them consumers and businesses, whatever. And what I've been doing payment innovation for most of my career. And what I find is a new payment only works really well if it's win-win-win, right? The payers win, the payees win, all of us in the middle win. You can get away with one or two being neutral. One win, two neutrals. If there's one loser in there, it dies. I advise startups in the payment space, and it's one of the things I tell them is look at that whole ecosystem. If somebody's going to lose, it's going to be really hard to get that network effect to make this thing work. So I just think, as we talk about it, next year when we have this, I'd love to see some merchants up at the table or some other people here to talk about that whole ecosystem, because that's what's going to make a success. And frankly, that's what we're seeing with the clearinghouse, with the products in market today, those use cases I talked about before, where you talk about that as worked payroll. Businesses are winning because they're able to hire employees in a tight labor market with a differentiator. Consumers are winning because they're getting paid right away. And we figured out how to make it happen in the middle. So we won too.
So we have a few minutes left, and I have one more question, but I also wanted to see if anybody in the audience has questions. And I believe we set up this microphone so people on the live stream can hear the question. So if you have a question, please step forward. And the last little tiny question I had, how will we achieve interoperability between all of our systems?
I'm happy to jump in on this one. It's going to take some time. Number one, we are starting out collaborating with the clearinghouse around routing interoperability. So basically what this means is it's going to be up to the financial institution to make the decision to route the payment based on price, based on availability, based on other factors. So that's really the stepping stone. And then the goal and objective would be to work towards message interoperability, where our networks could potentially exchange messages and work together more holistically, similar to the way it works in ACH. So that's certainly the goal, but we've got our work cut out for us, don't we?
Yeah, I think you have to have more than one network up and running before you start seriously talking about interoperability. So it's a little ahead of where we need to be.
Yeah.
We made everything that we've done so far available and as public as we could, and we were encouraging, just copy this completely, because the closer it's identical in terms of the message spec and the exact fields that are being used, the easier it's going to be. So there's work to be done, and we'll get there.
Okay.
Sorry, can I just add on
Sure.
interoperability? So I think there's a couple things that are happening now that again takes us in the right direction. And you mentioned before the work that we're doing to try to tie together real-time payment systems between Europe and the U.S. Right? And so I think there's work that's happening now. There's a standardization of payment messages, which kind of begins in earnest early next year with ISO 2022. That helps a lot. Not only kind of standardize the message, but have much richer data to try to add operational efficiencies, and even when I look at the data that we have and that the improvements that we get with ISO 2022 messaging, from a modeling point of view, it's beautiful. We love it and can't wait for it to happen fast enough. But I think also in terms of interoperability, we have to think about the new networks that are being created that will with digital assets, right? And that could be a central bank digital currency, for example. That could be a stable coin. That could be a tokenized deposit in a commercial bank. So there's all sorts of new forms of digital money that are on their way. It's not going to be tomorrow, but I think that there's got to be a lot of thought given to the people who are creating these new networks on how are you going to make that interoperable into what we have today. Because I think if they really want to realize the full value of the asset they're creating, whether that's a digital yen or a digital dollar or a stable coin, you're going to have that interoperability together, be able to connect what's being created with the existing payment rails and settlement services that we have today. So we actually just recently had done some experiments and announced a CBDC sandbox that we put together to invite commercial banks and to invite central banks in. We have 18 commercial banks and central banks that represent every region, every part of the world, and we're doing practical experiments on CBDCs cross-border, right? And again, the pitch that we're making is your first cases are probably domestic. Your first uses as a central bank are probably domestic. If you were to move forward with a digital dollar, and there's no indication that they will at this point, it's all kind of exploratory work. But if you do that, you need to start thinking about what does that look like cross-border. When that U.S. citizen takes their wallet with a digital dollar and goes to Paris for vacation, how does that work? And how do we provide that interoperability and connectivity to the existing payment rails and infrastructure and settlement services we have today? So we've anchored the work that we're doing in innovation for new digital assets, including sovereign currencies, which is a new form of their money, on interoperability. And we've taken steps with the community. Again, another example where we can kind of bring the community together, in this case, including central banks, to do very, very practical experiments on how would you actually implement this? How would this actually work? So interoperability is hugely important.
You wanted to add one thing?
Totally agree. It's really important. And I'll say probably something I spend a little bit less time on that maybe I should. And because I look at it and I say, we may be able to get the networks and everything happening internationally in countries interoperable on the same standard. It could happen. And maybe my AT&T phone will work on Verizon someday, right? But when I look at it, I draw lessons off the credit card industry. And you have a completely, interoperable, from a consumer perspective, we all think it's interoperable, but we understand what's happening on the background. And we're able to take a whole bunch of unique networks, a whole bunch of unique delivery devices, whether it's point of sale or e-commerce, and make it all look seamless to a consumer, seamless to a business. We're going to figure that out. We'll make that happen here. And if we can standardize some things at the network level to simplify it, great. But if not, I'm not losing sleep over that one because we know how to figure it out. We'll do that one.
Right. Okay, 2 questions from the audience.
Good morning. My name is Mark Frankel. I'm from FinLink. Thank you. Very informative morning session. So when I think about B2C payments or B2B payments, there's kind of 2 legs in the journey. There's the bank getting the money to the recipient, and that's what RTP solves for. But then there's the other leg, which is a corporate instructing the bank to make the payment. And that's subject to lots of other types of technology that can maybe slow down that process. And if both legs are not in real time, then is it truly a real-time payment? So my question for you is, how are banks and corporates working together to make that connectivity between corporates and banks real time? And maybe how does bank API technology play into all this?
I'll jump in on that one. So great question. And I think you're spot on the corporate side. When we launched with API origination. Everything's an API foundation. And we're embedding that API into the software of our corporates. So if it's their in-house ERP systems, I just visually say, someone on the phone dealing with someone at the other, someone's processing a refund on the phone, their software has our API embedded in it. So theoretically, they just press a button, right? And it executes that API. Also putting it in software that gets distributed downstream that way. But spot on, I think API is the answer for a lot of use cases. There's still others. There's still other industries that are batch processed. And I think you bring up some really good points then about, you lose some of the value of real-time payments, but you still gain a lot of the value And you'll see that in merchant settlement, for example, where, being able to pay the merchant in 5 minutes versus 2 days works, even if it is a batch origination.
Great. Next question.
Hi, good morning. My name's Tim Hadley. I work for Old National Bank. I'm a treasury management product lead. So in terms of thinking about the commercial client as an originator and making it, early on in this panel discussion, you talked about fragmentation being one of the speed bumps to slowing adoption of faster payments. How do we make it easier if I'm looking to, if I have some employees who are being paid by traditional ACH direct deposit, but then some who maybe now participate or bank with someone who, or an FI that participates in RTP, then eventually FedNow. How do you productize that, make it easier for them to not have to create this hodgepodge of, well, this time he needs to go here, this goes on the old way, this goes on the new way. Has much thought been given to how to simplify that for the originator to get a little bit more acceptance?
I can tell you something from the network perspective. I mean, you kind of gave the payroll example, and we're kind of trying to work our way through that because, as you described, is quite real, right? Which is, do I have to pay ACH? Can I pay real time? Do I have to pay one network versus another? So the banks, I think, are at the leading edge to have to solve that. We've kind of offered, and some of the banks have said, that's my job. So we're sort of thoughtful, but we're trying to think through how does that work kind of conceptually as opposed to how does it work in the mechanics, right? So you can leave the mechanics to the banks. I think payroll is one of the areas where it will change dramatically in the next 10 or 20 years. We just got so used to, every 2 weeks or once a month or whatever your paycheck is. It's like, what a dumb, what an antiquated concept, right? It is, right? We just got used to it. And that one can change. And I think it will. So.
Yeah, I agree with what you said on the bank side. So thoughts we have that as a capability that's a little bit built, but it's on our roadmap, and it gets down lead to what you said about having multiple networks before you really start to get into it a lot. But intelligent routing, just so the corporate says, I need to pay this person. And then on the back end, we can go through and figure out, okay, is that person exist on this network? Do they exist on this network in instant payment networks? And if not, is there a default network that we've already agreed to contractually with you that we can default to and just handle that all for you, so you don't have to become a payment rail expert.
Sure. Okay. Thank you.
Thank you for the questions, and thank you to the panelists. This is a great kickoff to the day.
Likewise.